is not irrelevant.
What'd you say, Sandy? Sandy, our producer, is...
I think we just lost all of our
S&P
audio.
is up almost 3%, yeah.
I think we just lost audio.
All right, and the NASDAQ is trailing. This is not a tech rally. In fact, the SOX is down almost 3 points. This is a blue chip, big cap, big mama.
That's right.
Big papa, old line, smokestack, 1950s, what's good for America, well, business is good for America, rally.
Well, you know, when you mentioned the SOX, which I know you watch closely, and we heard Bertha talking about Intel coming out, and yeah, it was better than expected, but they cut their CapEx budget. So the ramifications of that go all the way across the board. I mean, I had a guy on from Think Equity Partners the other day who was talking about how strong the holiday demand is going to be for things like iPods, MP3 players, flat panel TVs. He said when you go to Asia and look at people making the chips, it's just not, they're not seeing the demand. And it was an interesting data point when you talk about strength across the board, that there are areas at least of question marks out there right now.
Airlines are higher, I'm told.
Airlines are higher, AIG is higher, and
well, the insurers should be higher, okay? Because they raised their rates exorbitantly, and then we didn't get any hurricanes, so the insurers are making money hand over fist. They should be higher.
Oh, AIG is lower. All right, well, Mark mentioned airlines, they're higher. David Strine from Bear Stearns is with us, the airline analyst with Bear. David, how...
Stock exchange, right here on Squawk on the Street, don't go away.
I was looking for the hat.
That's gone.
Yeah.
Now you can test your options.
You Smarter Than Bond Report is sponsored by PIMCO, the authority on bonds.
We're back on the floor of the New York Stock Exchange. You know, it's really interesting. If you watch these boards, you almost can feel the rhythm of the market. And sure enough, I thought I saw something, and we have. We pulled back almost 30 points from the high, but still doing really, really well. Let's get some final thoughts from the people we've been talking to. I'm going to start with my old pal, Gene Peroni, down in Philadelphia. Gino, your final thoughts on this this milestone?
Certainly exciting, but we're extended here. I think we need some pullback, but pullbacks will be great buying opportunities for the long term.
Buy the dips, he says.
Phil, what do you think? Pullbacks, or can we be a little bit more of a straight arrow up?
I think fundamentals matter. I think the market is compressed in value over the last 5 years. Earnings are up. We'll have an above-average earnings year next year. I think it's a good climate, and I think fundamentals finally matter.
David Faber, of course, you think the Dow doesn't matter.
Yeah. Faber.
Let me just end with a couple of stocks that we should know. JP Morgan shares down. Jamie Dimon saying, hey, don't expect things to always stay this good. Apparently people are taking it in his word after what was quite a good quarter. They made quite a bit of money, by the way, on that Amaranth trade, taking a lot of that portfolio off of Amaranth ended up benefiting JP Morgan, but that stock is down, of course, not helping the Dow.
Yeah, and we got IBM contributing half of the gains that we're seeing on the Dow. You know, Gene and Phil, we've been playing with this a lot, and obviously it's just playing. But 14,000 on the Dow. You know, Jim Cramer says we could see it in a year. Gene, what do you think? Are we going to hit 14,000 in a year, or is that even maybe not aggressive enough?
Can't rule it out, Aaron, because of this excellent sector participation, the disciplined investor. I think the relatively attractive values. I've been on record saying 13,000 before this cycle expires. We'll revisit those numbers probably by the end of the year, but if anything, yes, I think we'll probably scooch them up a bit.
Phil?
I'm not going to jump to 14 yet. Let's get to 13, Aaron, but I think the trend is for higher markets.
You're saying fundamentals matter again, Phil. A lot of people are pointing to the enormous debt in the consumer sector, saying that is going to slow the economy, which will in turn slow the market. How do you get around that one?
Well, I'm kind of a victim of my history. I've been in the business 35 years, Mark, and I survived the 73, 74 market. Then nobody had a good job. Nobody had any money. There's a stark difference now. For 35 years, people have been predicting the demise of the consumer. I don't see huge increases in spending, but I don't see them falling off the table either.
All right, gentlemen, thank you very much.
Thanks, Mark. Thanks, Aaron.
Yep. We are sliding back down toward 12,000. Now we're at 1220. Yep. We got up as high as about 12,050 points. I can only echo what our guests have said.
Right.
Nothing goes straight up. I wouldn't be surprised to see a lot of backing and filling in this market. The internals are weakening still. So I wouldn't be at all surprised if we drop back below 12,000 at some point during the day.
It'll be interesting to see that and where we end. And then again, keep an eye on tech, like you said. I mean, Intel's gaining, but it cut its capex. That's not good news necessarily across the chip industry, which is a big indicator. So something to keep in mind as well as we go through the session.
And the other thing that strikes me is how calm the floor is.
Incredibly calm.
Thank you very much for watching. I'm Mark Haynes.
And I'm Erin Burnett. Morning Calls now.
Good morning again, everybody. I'm Mark Haynes on the floor of the New York Stock Exchange.
What a place to be, Mark, on a day like this. I'm Liz Klayman at Cnbc Global Headquarters. Well, if you're just tuning in on the West Coast or Central Time, Mountain Time, Wall Street is making history this morning. The Dow surpassing the 12,000 mark for the first time ever. Strong earnings, weaker than expected inflation data, and an unexpected jump in housing starts all helping to push the blue chips over the magic number. Take a look. You can see right from the outset here, the Dow jumped up above 12,000. Right now we have pulled back, but we're still up 69 points. The Dow stands at 12,019. Look at the NASDAQ, also having just a terrific day here, moving higher by 6 1/4 to 2351. Again, the pullback has started as soon as Mark Haynes pointed out that market internals started to weaken just about 9 minutes ago. That's when we started to see a bit of a reversal. But for now, we're still above the magic number. S&P 500 up 5 2/3 to 1369. Mark. You know what? Let me toss to Bertha Coombs because she's out on the floor as well at the NYSE. Bertha, just a historic morning to say the least. And when you think about it, almost 77 years to the week that we had the great crash of 1929. What a difference all of that time makes.
Yeah, October is usually a pretty volatile month, and this month it's been volatile to the upside. Liz, IBM is really what's powering. I sort of said tongue-in-cheek earlier, you spelled D12K with the initials IBM. Right now, IBM up 438. It looks like that's pretty close to a new high there. We've got good earnings coming out from IBM, and that was really the catalyst, reversing what we saw yesterday. We also had those tame inflation numbers, and that helped. Take a look at the IBM chart, moving up higher today. Certainly what's given us the momentum here this morning. But will it hold? Verini Associates, take a look at this chart. This is a chart that shows what happens to IBM when it beats, usually, earnings. Usually after earnings, IBM is up on average about 3.5% on the day after beating on earnings, and it beat handily here, up 10 cents over the expectation. 6 cents of that, interestingly enough, coming from the fact that the company has really bought back a lot of stock, and we're seeing that help a number of firms. But as the day goes on, it fades a little bit, and we're already seeing the Dow fade a little bit. That will certainly have an impact today on whether we close above 12,000. It fades on average a little less than 1%. So that's one of the things we're going to want to watch, the IBM intraday chart. Can it continue to power the Dow today? JP Morgan, one of the Dow laggards this morning, despite beating on earnings. The outlook is a little cloudy, and also the retail banking just did not hold up its end. JP Morgan is one of the Dow laggards today. Take a look at what's moving on the Dow. We've got some of the Dow movers to the upside. They include IBM, obviously, J&J coming off of its earnings yesterday, Intel as well. Boeing is higher as well. Honeywell, those are among the strongest. Then we've got the Dow laggards this morning, and some of the ones that have been in and out of positive territory include AIG and United Technologies, which kind of trade in this neighborhood. Come back out to me right now. We've got AIG now back up a penny or so. So we're watching some of the momentum on the Dow. But Liz, the other thing to watch, folks who watch the broader markets, is the S&P 500, which set a multi-year high today as well. If you look at that 5-year chart, 1373 seems to be the area that we need to get across. We came right up to it, very close to it this morning. That's what people are going to watch as the day moves on. Back to you.
We're points away there, very, very close, just 4 points away. Bertha, I'm interested to know the feel of the floor. If you look behind you at the traders, what's the atmosphere like? What are they saying?
You know, it's not like no one's got hats made up for this. They are saying they think we can hold it. They're happy to see it, but it's not that same thing we had when we moved to Dow 10,000, and it's certainly a different atmosphere. Take a look. It's a busier morning here than we normally see. That's the Verizon post right there. That's up 25 cents. Behind me, we've also got United Technologies. This is the Boeing post, up 27 cents as well. But there's so much electronic trading. It's not that same frenzy anymore that we used to see on the floor on a day like today.
Yeah, that sure is the similar situation with many of the other big exchanges. Thank you very much, Bertha. We'll be checking back with you in just a minute. But Mark, you were down there on the floor.
Yeah.
It is a different feel this time, isn't it?
Yeah. I even pulled a trader aside and asked him what was going on, because there was no reaction at all when we went through 12,000. Now, in milestones past, the cheers would erupt. You know, people would start throwing hats and all sorts of stuff. And maybe they'll do that at the closing bell if we close above 12,000.
Right.
But I've got to tell you that when we passed through 12,000, was no reaction at all. None at all. So let's get to John Lynch at Evergreen Investments and my old pal Art Hogan.